Hey everyone, welcome back to the channel. June 2025 has been nothing short of wild. This month, from military strikes in the Middle East to major global summits and big market moves, gave us much to think about, both as investors and global citizens. In this video, I'm breaking down the 4 most significant geopolitical events of June, what they mean for the world and the markets, and then diving into the stock market's performance across different sectors. After that, I'll show you how my portfolio performed this month and why I'm selling out of one of my positions. Let's get into it. Firstly, let's talk about the Israel-Iran-USA conflict. As on June 13th, Israel launched significant airstrikes on Iranian military and nuclear facilities. Iran responded with missiles and drone attacks, and by June 22nd, the US had entered the fight, bombing multiple nuclear sites deep within Iran. Iran then retaliated by targeting US bases in Iraq and Qatar. This marked one of the most dangerous direct military confrontations between these 3 nations in recent memory. Both sides already immediately broke the ceasefire that followed. Why does this matter? Because it shattered decades of nuclear deterrence norms and threatens global oil flows, especially if the Strait of Hormuz becomes a battleground. That means energy prices, shipping costs, and even inflation could see ripple effects worldwide. Next, on June 24th and the 25th, NATO had a summit in The Hague. As NATO leaders agreed to boost military and security spending to 5% of GDP by 2035. That includes 3.5% for core defense and 1.5% for cybersecurity and infrastructure. This historical summit redefined NATO's strategic vision, pushed mainly by US pressure on Europe to shoulder more of the defense burden. The move aims to deter Russian aggression, but it might also trigger a new arms race, especially with rising tensions across Eastern Europe and the Arctic. This will have enormous implications for defense contractors, government budgets, and long-term geopolitical balance. Next, let's talk about the G7 summit, as the G7 leaders met in mid-June and reiterated their support for Israel's right to defend itself, condemned Iran's escalation, and renewed backing for Ukraine. Beyond that, the focus was on strengthening economic resilience through sanctions, supply chain diversification, and industrial coordination. This summit reinforced the West's alliance unity amid rising authoritarianism globally. For investors, it signals for a long-term commitment to de-risking from China and Russia, and likely continued investment in domestic manufacturing, clean energy, and defense sectors. As a New Zealander myself, this one is for the Kiwis. I found this to be big news, as on June 20th, New Zealand's Prime Minister Christopher Luxon met with President Xi Jinping in Beijing. They agreed to deepen trade, ease visa restrictions, and cooperate on Pacific security. At the same time, New Zealand suspended $18 billion in aid to the Cook Islands over concerns about China's influence, highlighting how the Pacific is becoming a strategic battleground. This visit is a textbook example of how smaller democracies are walking a tightrope, maintaining trade ties with China while trying to resist its expanding reach. For the wider world, this shows how even secondary players like New Zealand are being pulled into the larger US-China rivalry. Now let's talk about the stock market. June was a mixed bag, but overall it was bullish, especially in the US markets. The S&P 500 and Nasdaq 100 pushed towards record highs, with tech leading the charge. Investors were buoyed by easing geopolitical fears, at least temporarily, and growing optimism around AI. Nvidia jumped over 11%, continuing its dominance in the AI chip space. AMD rose 8.8% after unveiling its new Instinct MI325X server chip, which drew strong interest from data center operators. Apple hit an all-time high, closing above 203, thanks to substantial service revenue and growing hype around its Vision Pro headset. Meanwhile, Amazon rallied around 6% as Prime Day forecasts looked strong and AWS guidance was better than expected. But not everything was green, as Tesla fell 14% as European EV sales slowed and investor worries grew around tightening consumer credit. Oil prices spiked mid-June, up over 13% as the Iran-Israel conflict intensified. That pushed up energy stocks like ExxonMobil and Chevron by 7 to 9%, but hurt airlines and consumer discretionary stocks like Delta and Nike. On the macro side, the Federal Reserve held rates steady at 4.25% to 4.5% on June 18th, but hinted to 2 cuts later this year. That dovish tone helped boost rate-sensitive assets like REITs, like Prologis and Realty Income, which rose 3 to 4%, while regional banks regained some lost ground. Outside the US, things were more fragile. The Hang Seng Index dropped about 6% as China's property crisis worsened and new US restrictions on Chinese AI firms spooked foreign investors. Stocks like Alibaba and Tencent declined more than 5%. In Europe, markets were flat. Luxury names like LVMH and Hermes dipped due to weaker Chinese demand, while defense stocks like BAE Systems and Thales climbed following the NATO summit's massive spending splurge. Now onto my portfolio. June has been a good month overall, but one month I've decided to sell out of is Costco. Costco is an incredible company, and I love the business model, the membership base, and the financials. But right now it's overpriced. The stock has climbed aggressively over the past 6 months and is now trading at a forward PE ratio of 42. That's incredibly high for a retail company, even one as consistent as Costco. On top of that, retail margins are under pressure, with rising shipping costs due to oil spikes and consumer spending starting to soften. I think there's limited upside in the short term. I'd rather rotate that capital into something with more growth potential, or wait on the sidelines and buy back in when it cools off. This was my Snowball Analytics. I believe Snowball Analytics is the best portfolio tracker on the internet at the moment, and we will go through it quickly right now. For the month of June, it aims at the value of $14,990.69. It did crack 15,000 a couple days ago, but now it's gone back down below that point. I have a total profit so far of a positive 4% or 580, which includes capital gains of 271, realized profit and loss of 37, and dividends of $408. If we look at the individual holdings, the funds has an overall increase of around 4%. If we look through individually, SCHD is by far my least well-performing fund with negative 5%, with over half my portfolio actually invested in SCHD, so I hope that will go up very, very soon. MSTY has constantly been good ever since I've purchased into this holding, with a 15% increase over time, especially through the $370 in the dividends received. QQQ, VOO, VUG, and SPY has all performed relatively well, especially the VUG Growth Index Fund as well as the QQQ, both performing nearly 10% as soon as I got it. So next we go through information technology, which has gone up 13%. This includes ASML, which is one of the holdings which I am most bullish on. I believe this company is a strong hold for the next 5 years. It's gone up 30% since I've bought into it, and with their growing revenue and their growing dividends, I believe it is a good buy for everyone. Next we look at FICO. FICO is a holding that I actually only bought into a couple of weeks ago during the month of June, and since then it's gone up 5.51%. And Microsoft has gone up 20% since I last bought into it, as I bought into it when it was very, very low price. I wish I had purchased more, as I only invested $85 into this, which is now $105, but I will be looking to purchase more of the stock later in the future. Next we go in communication services. Google, very, very volatile in recent months, currently down 2.51%, and we'll be looking for next month performance as they have a lot coming up in the future. And then financials, S&P Global, one of the most reliant credit scorers on the market at the moment, and very, very strong revenues and financials. They've gone up 2.25%, very, very well. And next we go through financials. Oh, we've gone through that. Oops. Healthcare, UNH. I recently bought into the United Health Group Incorporated during this month as well. It's currently gone down 2.63%, but currently it's at an all-time 52-week low. So I hope that it will go back up with good revenues and good financials backing it. And the consumer staples, Costco. This is the one I talked about before, which I'm looking to sell out of. And then consumer discretionary, Booking Holdings and Amazon both performing pretty well, especially Booking Holdings. Yep. And my top 10 gainers include MSTY, Google, ASML, QQQ, and VUG, with my top day losers SCHD, UNH, Costco, SPY, S&P Global, and FICO. Next we look through That's an analytics. So currently, year to date, my portfolio is behind the S&P 500 by 0.05%. And then if you look at, this month specifically, I'm down 0.77% from the S&P 500, so not very strong. There was a time where I was above, but then since then it's only been below. So far this month, the month of June has been pretty steady, I would say, with a slight growth. Much better than the month of April and May, with May being the best performing month actually, May to June. And then if we look at through the portfolio returns of dynamics of it, March was 0.97% increase, April was 1.9% decrease. This was when the tariffs came in place. May was the resurgence after the tariffs and all the tariff holds being put in place, and then June was a very flat month for me. And the holding performance, looking at it through each by each, SCHD is by far the worst performing fund. It kind of sucks as it is my largest fund in my portfolio, and Microsoft being 22%, which is by far much higher than I ever thought it would actually grow. We can look at my dividend calendar next. So for the month of June, I have received MSTY, S&P Global, Microsoft, Google dividends. I have yet to receive my United Health Group and SCHD and Booking Holding dividends, which will be a decent amount, especially SCHD, as I have a large holding in their position. Looking ahead for July, VUG, VOO, MSTY, QQQ, and SPY all paying dividends out, with QQQ and SPY already declaring them, and MSTY, VOO, and VUG not yet declaring the amounts. In August will be very exciting as there will be 2 MSTY payments, which is my Simplicity savings account, which is currently at $2,661.18. Now we go to my Wesfarmers Equate Plus account. This is where I hold my Wesfarmers stock that is given to me through my employment benefits. So currently I have 13 shares in my Wesfarmers account, New Zealand Awards, which is a total value of $1,174.91. Currently each share price is going at 83.80 Australian dollars. And for this month, I would say it's been relatively stayed pretty flat, going from 82.10 for the month of June. It totaled $18,826.78. In May was $17,760, so that is $1,066.50 increase from the following month. So that's your geopolitical and stock market wrap for June 2025. From the chaos in the Middle East to bullish tech earnings, and from NATO defense pivot to China-Pacific diplomacy, the world and the markets are shifting fast. I'll be back soon with my Q2 earnings watch list and a deep dive into some undervalued opportunities I'll be eyeing on for July. Let me know in the comments, what moves are you making in your portfolio? Are you holding, buying, or trimming positions after this wild month? Don't forget to like, subscribe, and turn on the bell if you found this helpful. See you in the next one, and thank you for watching. Bye bye!